What?
Over the many years of doing this show, we've come up with like our own set of terms, right? Analyst chase price, yada, yada, yada. But Dennis came up with a great one today. Forensic technical analysis. And if you don't know what that means, you're going to find out in just a few minutes on PreMarket Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. We're starting out with a little bit of a lead here, up 4.5 handles at 52.32. We have the buck down a dime at 102.89. TLT up 30 cents, 96.21. Crude holding steady in the 75 handle, up 19 cents. At 75.42, gold tacking on 18 bucks. Silver trying to participate, up 19 cents. Bitcoin on the rebound too. That is up $2,600. We got to look at the Japan ETF. That's trading up 57 cents. And then what we're going to talk about now, the Japanese yen. It's flat today. Let's bring on Triple D and AB and get right to it.
Let's jump in. Let's talk currencies here. We never stop talking currency. First, give us the overnight action here, Joel, because obviously we go to the S&Ps. Oh, you did. I missed that.
Were you sleeping?
Sorry. I was
Okay,
sleeping,
all right.
actually. Actually, no, I went to get a drink of water, so I missed the intro. It was probably a good intro there, too. But I caught the tail end of your intro. Let's do the currencies here. And what we want to talk about, obviously, is the driver of the currency, of everything right now, which is the Japanese yen. Obviously, I had Jim Tassoni on yesterday. He was talking the carry trade and lighting us on, that this might not just be the Japanese yen. But we know primarily there's been a lot of people borrowing in cheap Japanese dollars and investing in other countries. The typical carry trade, like the one they teach you in school, is to borrow in the cheap currency and then invest in like bonds in the higher rate currency. So you'd be, just for example, borrowing in Japanese yen, investing in US treasuries, and just picking yourself up 4% or 4.5%, the interest rate differential. But what has likely happened, and what obviously the media has been talking about, is the carry trades become a little bit more aggressive, where investors are borrowing in the cheap Japanese yen and investing in tech stocks. So why pick up 5 when you can pick up 25, right, Joel?
I mean, come on, arbitrage.
Yeah, well, it's not arbitrage, but it's taking on a lot of risk. But if tech stocks are only going to go up, it's a really smart trade. What happens is when they start going down, it's not that smart of a trade. But the bigger problem is what happens when the currency changes. So, just to recap, obviously the Japanese yens had a serious rally over the course of the last month. And we know in the last week, on Monday, over the weekend, it especially rallied. And that's what really, really started selling us off. But what I love to see here is this perfect inverse correlation. Look at what Joel has done for us here. The Qs on the left and the Japanese yen on the right. And do you know what happened? So if you look, when the Japanese yen started rallying, that was on July 11th. That's when it had that big spike. Do you want to know what day the Qs started selling off and had their big down spike? July 11th. The exact same day that the Japanese yen had the big spike up of about 2%, the Qs sold off about 2% that, or 1.5% that day. That was the big down day on July 11th. Is that not incredible? It was right to the day. So it's just showing you how linked we are to the Japanese yen right now. Japanese yen, rally, rally, rally. Qs, sell off, sell off, sell off. Japanese yen sells off. Last couple of days a little bit. Qs start to rally back up. So you don't have to look at anything else going forward to try to predict the market. Just simply look at the Japanese yen. And, the media's been telling you this, but it is like perfectly inversely.
I wish I would have seen this a couple days.
Like it is so like right there. Like Japanese yen spikes up, makes that high, comes off. NASDAQ makes that low, rallies. We are completely. So the question is, two things can happen. One, this could continue to unwind and we become unlinked from the Japanese yen. I don't think it's not like in Jamie Dimon yesterday. You were saying he said 75% over. I think everybody's just guessing. Nobody knows how deep we are here. Nobody knows how deep money managers are here. Nobody knows how aggressive some people have been borrowing in yen and investing in other countries, especially in U.S. tech stocks, which seems so aggressive. So what we can comfortably say is the trade was very crowded. Is it less crowded than it was a week ago? Yes. Is it over? Is it 75% over? Nobody has the answer. Of course, Jamie Dimon's saying it's 75% over. He's not going to go on there and say it's 10% over, and then everybody's going to panic and say, oh my gosh, we've got this much more pain ahead of us. So the other thing is that it doesn't unwind anymore, and the Japanese yen continues to fall off. So if the Japanese yen continues to fall, then we're going to obviously see probably tech stocks bounce back. So if you're trading tech, keep an eye on Japan, keep an eye on Japanese yen. This could be happening in other currencies too.
Yeah. I just pulled up the Swiss franc. I mean, you don't know where it's going, right? You don't know, what the borrowing that was done, what it's directly linked to. We can see the pronounced effect in the tech stocks, but Jim mentioned it yesterday too. Like where other ancillary pockets in the markets that are being exposed to this. So you don't know. First thing I looked at was a good old Swiss franc. I looked at the pound, and that's been getting pounded. It's just been getting pounded forever. So, but
nobody's borrowing in pounds like to go invest somewhere. They're going the cheap Japanese currency. We know where the currency was the cheapest forever. They're the only country that kept interest rates. Every single country's been jacking interest rates to fight inflation except Japan. So what do if you're borrowing money? You probably go to the cheapest currency. And people are saying trillions of dollars. And we don't even know how many trillions of dollars. But all we can tell you is comfortably to say that this is a heavily levered trade. What happens in heavily levered trades when they come off? They get really ugly quickly. So I think it's still a heavily levered trade, and that is your risk, folks. It's not a matter of, they're going to come back and the tech stocks are going to bounce back. We don't know how levered up this trade is. So there is a scenario where this could get a lot uglier too. There's a scenario where stocks go back to the highs. It's a tough market to call. What I will say is I think it's a real battleground here between the bulls and the bears. And we were absolutely right with what we said on the show yesterday, is that we're playing the fade trade. Buying dips, selling rallies. Right now, you're not in an investing environment, you're in a trading environment. The trading is awesome. If you're a trend trader, you hate this market. But if you're a contrarian, this is what you've been waiting for. I mean, the fading is just unbelievable. It's so consistent. I mean, yesterday we rally 100 handles and then give it all back.
I know that was this is the ETF. I just want because not everyone has currency quotes. Dennis, you might want to put this up here. This is the FXY. Trades, the volume has really picked up a couple days, but if you don't have currency quotes or futures quotes and you want to pull this up,
give you a good feel here.
Yeah, there you go. And then the ETF is EWJ. But you know what?
It's tricky. Thin. EWJ, well, at least it's certain, like pre-market right now. It's hardly traded.
It's thin.
So it's not during the day, but pre-market it doesn't have much of a market, so it's only traded 4,000 shares. But it's still fairly liquid. Like you're seeing it up here this morning. So this is what you got to watch. That FXY. Write that down.
Yep.
Writing it down.
Yep,
FXY,
right. That's what you guys are going to learn today.
They are the leaders. This is what is happening, and we know this. And it's not new information. I just didn't realize how correlated it was because everybody keeps thinking this happened on Monday. This didn't happen on Monday, folks. When we start looking at the charts, this happened and started on July the 11th when the Qs topped and the Japanese yen bottomed. This exact same day to the day. That's when you've got the carry trade pretty heavy.
So just a quick update on our interest rates here in the United States. The CME Watch tool is now showing a 70.5% chance that we will get a 50 basis point cut at the September 18th meeting. That's still more than a month away, but I think, a lot of people looking at this. I mean, the Bank of Japan raised rates on July 31st by 25 basis points. It's not like they were hiking it up 200 basis points or anything like that. It was just a 25 basis point hike, but because Japan has historically kept those rates so low, I think it was enough to kind of cause this fear. But as we start bringing our rates down a little bit, there might be a little bit more equilibrium. It's not going to be as big of a difference between the two currencies. So again, that's still more than a month away, but it'll be interesting to see if they do end up going with 50 basis points or 25 here. And it probably will depend a lot on not only economic data, but how the markets are doing in the next 5, 6
You know,
weeks
I
or so.
just want to make one
Sure.
final comment on this, and then we can move on to some stocks, because I saw the article, I saw the news, and I read the article like 2 or 3 times, the dovish article from the I can't even pronounce the guy's name, and I read it like 2 or 3 times, and at the end of the article, and I'm going to go back and read it again, he said they still think they're going to go another half a point by the end of the year. So if that, I mean, I don't know what he said was so dovish. That if they're still going a half a point, maybe what were they thinking of going a point? I mean, holy mackerel! Look what they did. Look what the small increment did. If they even go another quarter point, it's gonna. Now maybe I'm wrong. I'll go back and read the article again. I think it was on Bloomberg. They still said they're going, but somehow the street interpreted that as dovish. So charts don't lie.
All right,
Traders and investors do.
Let's get into some earnings reports. We'll start with the biggest one this morning. That was, of course, Eli Lilly, crushing it out of the park. Shares up more than 11% this morning. The EPS reported non-GAAP. Eli Lilly reported non-GAAP EPS of $3.92, beat by $1.16. Revenue of $11.3 billion, beat by $1.33 billion. They raised their full year revenue guidance by $3 billion. Talked about the strength of Mounjaro and Zepbound, of course, their GLP-1s, weight loss drugs. And, we've talked about increased competition in the space, but Eli Lilly's still the dominant player in the weight loss game. Shares, again, up $89 this morning.
The company's firing on all cylinders. Fundamentally, this company is just absolutely killing it. The problem is technically here. We broke down from 950 to 750. Now we get the snap back to 850. That looks just ballparking it like a 50% retracement.
I just did it. 850.
So we're right there. You're going to run into major resistance here, I would think. Because are people really that comfortable in this market, not in Kansas anymore? We said it yesterday, to just buy this up to 900, 950. It's going right back to the highs. I think people are going to be coming in, money managers, 8:13 in the morning. But, as more money managers get to the desk, they're like, oh, I want some cash, raise some cash. Maybe I'll take some of that Lilly off. I think that's what's going to happen. I think you will be susceptible to profit taking on this. And just the evidence. I mean, we continue to see rallies getting sold. So we look at Eli Lilly here, and we see it trading up $87. And your money managers are looking to probably get a little bit more protection, a little bit more cautious, especially those levered up money managers that were borrowing in yen and maybe investing in stocks like Eli Lilly. This is a gift. It's a gift. Now, again, the company is firing all cylinders. It's a great company for investing purposes, but I don't think I'm in any. This market is not the market to buy reps in. Definitely not the market to buy reps.
857, Dennis. 857.
Right there, right now, at the 50% retracement of the overall move.
And what you had here on the technical basis is you had the big dip to 850 off the high. Like, okay, 850. It's the bottom. I'm loaded up. It's going back to 950. Then you sat there for a couple days, sucked more people in, and then got flushed down the toilet all the way to 750. And then there's a whole other group of investors that well, I'm not buying Lilly until it at least gets under $800. Well, they didn't imagine it going to 740, 755. If you bought that and going into earnings, I don't know what the expected move was. I don't know what the calls or anything at, but man, you don't have to take off the position. You don't have to do anything, but man,
you're being made whole.
A whole.
Man. Somebody in the chat saying short interest on this is 29%. It's not. That's not even close. I got like 1% on short floats. So I don't know, purgatory. I don't know where the data is. Lilly is not a heavily shorted stock, at least not from my data. So unless I've never heard of Lilly being a high short interest stock. So I think it's very, very low, the short interest here. So this is simply, what do you have, AB?
Less than 1%.
Yeah, less than 1%. So which is typical. All stocks have, up to 1%. I mean, that's just, regular market making can have that happen. So this is not a short interest stock. So I'm just saying we're in a market where they're taking profits. You got a stock up 89 points here. You're like, look at my VKTX, Joel.
Oh, you saw? Yep.
I didn't get the high. Sold way too soon. I did not see going to 70, but right back down. Right back down. I mean, again, the market that we're in. So macros continue to drive the bus. When you're in this type of market, take the money and run. Woo, woo, woo. There's your Stephen Miller Band market again. That's where we are. That's where I am in Lilly. That's what I would be doing.
All right, let's keep the earnings train ticking. Let's go over to Hood. Robinhood reported earnings. I think that was yesterday after the close, I believe. Hold on, let me give it 1 second while its data is loading for me. Hood yesterday reported EPS of 21 cents, which beat estimates by 6 cents. Revenue of 682 million, beat by 39 million. So you had the double beat. Why is the stock trading down? Let's see. Gold subscribers hit 2 million. Crypto revenue up 161% year over year. I guess the guidance must have just been a little bit disappointing or something, because otherwise, they beat on both top line numbers here.
It's up now, though.
Oh, okay.
It's up 50 cents. They hit it initially, AB.
Okay.
They really hit it initially, and then they brought it back up. And it is trading a little bit higher, and these numbers were fine. The stock really has gotten hit. I would have this one on my shopping list. I don't know if we're going to get a retest of the 14, but
no, boy.
I like not today, Joel. I'm just saying in the
next no, I know. That's a big move.
It's a big move. It's a big bounce off, and I'm not sure. I think this Robinhood just continues to become, more of a bigger piece. I mean, with their exchanges and their after hours, they're doing a lot of things right over at Robinhood. I know some people hate them still from, the GameStop saga and everything, but to be honest with you, this company's doing a lot of stuff right. Fundamentally, this company's doing a lot of stuff right. I wouldn't be opposed to buying the stock, but I'm not buying it today.
It's trading up, modestly here in the pre-market. They're a long way, well, not that far from a 50% retracement. That'd be a $2 move up to 1950. So if you want a longer term target, but right here, right now, let's catch a bid right here at 1750, 1752. Yesterday's high, 2-day high 52. Today's high 64. Seems to be bid there. Maybe one of these charts where just opens and then gives you a little bit of a head fake. I don't know, maybe won't go to green, maybe on a day trade. If you're short, maybe try and get it green. But if the spoos stay calm and Lilly stays up and everyone's in a perky mood and we don't have any 8:30 data messing us up, I can see this holding a 1750 bid and rallying. I don't know. This is an important candle. And the range of that candle, 1929, if you're looking for a next daily target.
I think it's a good company, actually. I don't think the valuation's crazy. Well, it's hard because they're still growing and they hadn't just turned profitable a little while ago. But with the growth in accounts and stuff, I still think this could even be a takeout target eventually. I said that when it's back.
We said that is $7-8. I know.
$7-8, and I wish I would have just loaded up.
I bought it a couple times and I puked it out, man.
I know it's a hard one. I never did. I never did buy it.
I did. I really should have. It was like.
And now it's run along, obviously from 7 to 24. But, come back down to 14, 15 area here. I mean, I don't think you're getting it back at 7 or, if it goes back to 7 or 8, the market went into serious trouble.
It's over.
Like we had crypto crash or something. If that goes back to 7 or 8, like crypto, like you're talking Bitcoin back at like 20,000. That's when Robinhood's at $8. Yeah. I don't think that's happening. I don't think we're in that. I don't think we're in this environment. Like, again, we started the show and it was kind of scary to think about, how levered people might be up. But I still don't think we're in this environment where this is the big one. Like, we're going to go down 50, 60% on stocks. Like, some people are calling for that on Twitter, and this is what happens. I think, you could see, an official bear market where maybe the QQQs do fall off. How far are we from an official bear market? 503 was the high, like being down 20% officially. So you'd have to get down to what? Around 400. We're quite a ways away from that. We're 435. Like, that's in the cards, folks. That's in the cards. But I don't think this is like with the setup that we have with interest rates going to start going down. You got to think like you should still be, buying stocks on the dips. And I know it's painful You know, I bought a couple stocks recently, down in them significantly. It's painful when you buy something, you know, and you get up in it in the long-term account, and then all of a sudden, you know, like Micron, you know, I bought Micron the other day at 87, and it went yesterday up to 93. Went right back down at 87. I mean, one day it gives it back. So that's why we're in a trading market too. Like you buy them, flip them out, and then get back out. But, you know, I'm trying to buy a little bit in the long-term portfolio too and not look at that stuff. And it really ticks you off when you get up 10% in something and the next day it's all gone. So it's just the kind of market we're in. It's still take the money and run market. So if you're a trader, you're ringing the register on your profits. If you're an investor, you're buying good companies, reasonable valuations. Lots of good companies at reasonable valuations right now.
Just looking through my pre-market screener here. We do have a lot of stocks making moves after earnings. Let's talk some Zillow Group, and we can use that to talk a little bit about the just overall real estate market as well. Zillow shares trading higher after the company reported EPS of 39 cents, beat the 27-cent estimate. Sales came in at $572 million, beat the $537 million estimate there. Strong guidance here for the stock as well, lifting it higher, trading up more than $5 this morning on Zillow.
Oh, man. Ooh, same thing. Like, I mean, we got crashed, we bounced back. And again, it doesn't mean that things have to just immediately sell off. Sometimes they stay up for a bit. Sometimes they may continue. You know, there's going to be odd stocks. But this is, again, like we just, you know, getting back so many losses so quickly. I think if you're, you know, doing all these and you're buying all these stocks up 12% today, I think you're going to be disappointed. You know, some of them are going to hold up and others are going to fall off. But overall, we're in the sell the rip market. So I'm going to sound like a broken record here, but I'm not buying this stock up 12% either. I'd be selling it if I had it. That's just the way. And again, it depends why you have it. But if you're on it for a trade and you just pick up 12%, we're still in the Steve Miller Band market. As I said that 1 minute ago, we didn't leave it. Take the money and run.
Yeah, and so opinion. Zillow right now, I mean, it's an interesting situation when you look at the overall housing market, because obviously if there is a overall economic slowdown that, you know, isn't great for the housing market, but you do have rate cuts on the horizon with some lower mortgage rates and then increased demand here. And I think a lot of people have been maybe in the market for a house or thinking about a move for the past couple of years now and been like waiting for the right time. And maybe as the interest rates start to fall, that time becomes, you know, more people start acting on that. And I was reading a report yesterday from Resi Club, which it's like a newer data provider in the space, and some interesting, you know, data points there. They interviewed or surveyed, you know, a few hundred landlords throughout the United States. And the majority of landlords said they plan on purchasing an additional property in the next year or so, in the next 12 months. And only like 20% said they would consider selling one in the next 12 months. So it sounds like the demand is still there for properties. The question again just becomes, like, when the mortgage rates start to fall, if the prices start going out of control again, because we know how big of a deal rent prices and housing prices have been for inflation. That's been like the stickiest part of inflation the past couple of years. So the Fed probably doesn't want to see rates come down, then all of a sudden rent and housing prices go crazy again. But it sounds like based on the demand, that might happen. So it could be something to watch there. Again, just in the overall real estate market. Going through some other earnings this morning. We've done a lot of good ones so far. Let's go to some bad. We did have Monster report, moving some other stocks with it as well. So Monster reported EPS here of 41 cents, missed by 5 cents. Revenue of 1.9 billion, missed by $110 million. Cautious guidance here. So I guess everything going on with Celsius wasn't contained just to Celsius, because again, Monster had a bad quarter as well. But you are seeing Celsius get hammered on the Monster report as well.
What happened? No, actually, it's funny though, AB. Celsius was trading up after the Monster report last night. There had to be another headline coming on Celsius this morning that all of a sudden, Bank of America downgrade to sell this morning.
Oh,
how in the hell? So I'm going to take back.
I'm buying it. I'm
going to take back what I said yesterday, and I said upgrades and downgrades don't matter in bear markets. You know what really matters in bear markets is the downgrades, because everybody is so freaking scared. I mean, here's a stock that has already been absolutely crushed. If this isn't a Johnny-come-lately downgrade, I don't know what is. And they're going to knock it down 5% because Bank of America comes out and lowers their price target from 60 to 32. So Bank of America, dead wrong. Well, I guess they were neutral, but now they come out to sell. I mean, this is just the most Johnny-come-lately downgrade ever. I'm reading from the analyst note here. The energy drink category has been steadily growing volume at a pace suggesting sustainable 4 to 5% growth over the next few years. This pace began to erode earlier this year, and we have published previously. We do not expect to see meaningful recovery until next summer. In our view, the slowdown was driven at least in part by Celsius' faster than sustainable growth rate since 2021, now exacerbated by prevailing weakness in the consumer environment. Still, our research suggests that the slowdown in the category will have an outsized impact on Celsius. As a result, we downgrade our rating to underperform from neutral and lower our price target from $60 to $32. Johnny come lately, they weren't at buy, they were at neutral, but now they're saying it's going to go down another 5 points. They're trying to take it there today, Joel. I mean, I'm not coming in here and buying these stocks, and it's really tough to catch the falling knives. And, I've tried to catch a couple falling knives in my long-term portfolio the last few days, and it's been a very bad move. But wow, what a late, and I can't believe they're knocking it down 5% more because some analysts chasing the stock.
This is when we were talking about this stock where I got
Sorry, I laughed out loud when I said I just want to show it, thinking about it and then continue. Downgrade to Celsius.
That's good.
That's
good. That's good. That's good job from thinking about it.
You know who that character is there on that?
No, let's bring it back up. Who is that?
Do you know who that is?
George Carlin.
Yeah.
Oh, it is.
One of the greatest comedians of all time. The 7 words you can't say on television. I wonder
if
they
are.
I can't say them on television. But we were talking this stock. It had earnings just a couple days ago, right? And they were popping it on earnings. Remember that?
Yeah.
And that earnings
didn't last long.
Yeah.
We got that one right.
Oh man, this is a round tripper. I don't know.
Round tripper. This is just a big dipper.
This is the pre-market low is right here, right now. I'll give you that. I mean, it's going to be hard to give you anything else besides this. 37.27. The next monthly low, and I'm just giving you a monthly low because that's all I have, is 32.06. And then if you want another trick out of my technical analysis book, I'll go to the weekly. And sometimes they're the same number. If you want a weekly number, if you've been waiting to buy this since May of 2023, your May low was a 34.34. I would give that a 2-star.
All right, we do
valuation here, folks. This is what I talk about. When the growth slows, and I've talked about this for years on the show, when the growth starts to slow down and you have these nosebleed valuation stocks, you have a huge gap between the growth guys and the momentum guys and the value guys. The value guys like the 10, 12, 15, 20 PEs. The growth guys don't care about PE. All they care about is going up. So stock goes up, 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 up. Momentum traders don't give a crap about any fundamental PE stuff. They're just trading momentum. When the growth slows and the momentum dies, momentum traders say, I'm out. And then the value guys are way down here. This is the gap that it fills. It has to go all the way down to where the value guys are. I don't even think we're there yet.
Yeah, you know what I think too? I think this might be getting hit because of the yen carry trade too.
Probably. They're borrowing yen to buy Celsius. Welcome to 2024 investing, where everybody takes as much risk as possible.
All right, we do have
job numbers
going wide. Cancel all button. Cancel all. Thank you, chat. Right. Thank you, chat. This is why we have the chat, to save me from getting picked off. Sold. Let's go.
Initial jobless claims, the expectation is for 240,000 jobless claims coming in. It was previously around 250,000. So again, we should be getting that number any second here now.
Wide. Holy S&P went wide.
Oh, that rally. Oh, rally. Everything is great now.
233,000 versus 241 estimate. So less jobless claims than expected.
Oh, baby, we're going 52.60. Do I hear 52.65? All right, 52. Do I hear 52.70? Can I get 52.70? Come on, 70, 52.70, 69 high. We're still going up. We're up 42 hand, 52.71 prints. Give me 52.75. Can we get to 75? No, maybe not. 71 and a quarter. Boy, that was quick here. I hope Dennis cancels his offers and not his bids. Let's see if we have anything up there. Nah, there's nothing. Just like yesterday, man. And now everyone that bought it, oh, I'm going to scalp out of this. Oh, revisions coming back down. Reality. There is a rip and a dip and a rip and a dip. There you go. Break down the numbers for us.
So we were looking for, the expectation was for 240,000 initial jobless claims that came in lighter than expected at 233,000. So I guess the market is liking the fact that the labor market is not weakening at the pace that some had feared. I don't know. Let's see if the CME watch tool has changed at all, if that impacts our odds of getting 50 basis points. Yep, it did lower a little bit.
Oh yeah, now it's moving. Now the Fed funds rate tool on CME is now in a fast market.
Yep, we are moving there. Let's see. So we do have a couple minutes before our special guest of the day joins. Some other news that we didn't talk about in the pre-market show. It's kind of just coming across my desk now, but I do think this is noteworthy. So do you know what Embraer does, Joel?
Is it airplanes?
You're such a smart guy. You must be a Michigan man.
We won't go into that.
Why do they call it a Michigan man?
Oh, we don't need another segment on that.
So Embraer is
symbol me.
Symbol is ERJ. ERJ. I don't know the phonetic letters of that. Someone in the chat help me out with that. So ERJ is, I guess the third biggest airplane manufacturer behind, of course, Boeing and Airbus. A couple headlines here I'm seeing on ERJ here. One is that LATAM, the Latin American Airlines, is potentially going to do a deal with them and get a fleet from them. They also secured a $1 billion revolving credit line. Either way, stock is trading up more than 9% this morning. If you've just been buying Boeing because you're like, oh, there's only two of them out there, you got to be looking at this and saying, uh-oh, like is Embraer coming in to try to take some market share from Boeing here?
It's getting a pop. I mean, that's a headline. It's a positive headline. You want to see that when you're long the stock. The street's taking it up here on this news. 8,000 shares have traded. That was a pretty, I'm not sure what time we can go to the time. Oh, boy, just quiet. It's going to be a tough one here. I would say the only potential areas of resistance here, right now, 29.45 was your August 2nd high. So if that was your target on a short-term trade, there it is right now. If you're looking for more meat on the bone, you don't have a pair of highs until you get into the 31 handle. And that's, let's split those two highs, 31.23, 31.40. Let's call it 31.30.
I just got news. Sorry, I misread my messages earlier. We do not have our special guest coming, but that gives us more time to talk some stocks, potentially take some questions or tickers from the chat. So you guys are still in good hands because we will have, Dennis will be hopping back.
Dennis might not be back. That was a big move, but we'll be fine. I did reach out to Kenny Glick, and I don't know if he's listening. He's his daughter is going to be a freshman at the University of Georgia, I believe. And I called him, and he was on his way to Georgia, so I couldn't get him as a last second fill in. But I got some other pipes on the line out there. But if not, it will be us for the remainder of the day.
There we go. Echo Romeo Joliet. I think it's
Juliet. Yeah. Oh, do you know those?
No, I don't, but he's got the Wrigley Field. I went to my first game at Wrigley Field over the weekend. It was a good time. Have you ever been to a baseball game there?
Yeah, I lived in Chicago for 7 years, and I went to one game there, and I think one or two. They were a lot of times in the afternoon. It was hot, but I did go to quite a few White Sox games, and I actually went to one White Sox game. I don't think I've ever told this story. I had a cousin in the family that was the announcers for the California Angels, and his name was Alan Elconin, and he
Okay.
went by the name Elconin. That was his voice name. His name, because Gene Autry thought Elconin was too long of a name, so he invited us. So we went to real quick story. I'll finish and we'll get back to the market. So Lisa and I went out to dinner with him, and then we went to the White Sox game. And he's calling the game, and the guy throws a ball, and he goes, and that's a curveball right down the middle. And I'm like, how do you know that was a curveball? How could you see that? And he goes, it's radio.
Oh man. Yeah, I mean, it was a good time. Someone in the chat's asking where we sat. We actually didn't sit in the bleachers. We sat AJ was there too. AJ, I was at the Saturday game, the one where the Cardinals won because the Cubs kept making errors. It was awesome because the people around us kept getting upset. All right. Oh wow. Lived in Chicago for 7 years.
Back up near the highs. And this is your indicator. I forgot about that jobs number here. But your Lilly indicator is still working. Lilly still up 101.86, 970, 876. Over that 50% retracement. Let's see if we can find some daily highs in here. 878.34, maybe a potential target. And then after that, 887.72.
Looking at some other stocks making moves this morning. Should we talk some WBD? Warner Brothers Discovery reported earnings, and I mean this stock has just been a disaster. Well, actually, oh wait, hold on. Let me get
It's bad.
I'm getting some lagging data here. All right, Warner Bros. Discovery here reported earnings yesterday after the close. EPS came in at a loss of $4.07. They said that may not compare to the loss of 19-cent estimate. Revenue came in at $9.71 billion, missed by $360 million. Just not a good report for this for Warner Bros. Discovery. Wasn't this stock supposed to be getting bought out by someone, Joel?
Was that? No, that was it was Sundance and
or Skydance Media and
was it this one?
Oh no, Paramount. I'm talking about Paramount.
Yeah. And I can't remember that symbol that changes so much. I still, what's the symbol on it now?
On Para, I think it's PARA.
Yeah, that used to be the old man, what was that meme stock for a while? Oh man. That pair is down, so I don't know what the deal. This is all-time low, WBD. I mean, we're still ripping in the S&Ps here, by the way. WBD, this is an all-time low, folks. That's all I could really say for you. All-time low, 690, 694. You traded lower in the pre-market. I'll just give you my 668, 669. I'm going to kind of give you my similar analysis that I gave in another stock that got pounded yesterday, and I think it had. I identified a buyer in the lower 9 handle. That was Lyft. Remember, we were looking at Lyft. Was it Lyft?
Yeah. Is there another pair trade in the market that has such a wide disparity between the leader and the second place as Uber and Lyft? Because Uber stock has been so strong and Lyft stock has been so weak over the past, year and a half or so. And I actually got this one completely wrong because I thought, as people talked about, there being an economic slowdown, people would order less food for delivery. Because Joel, I know you guys don't do this, the Uber Eats and stuff like that. But it is so expensive. It's ridiculous. I've gotten to the point where I'm just like, I'm just not going to do it anymore.
Yeah.
I'm going to get off my lazy butt. And if I'm going to order, something off there, I can go to a restaurant and pick it up myself. It's so easy. You call it into a restaurant. All right, 15 minutes, get in your car, go there, pick it up, and you're saving yourself like over $20 when you do the Uber Eats. And Lyft doesn't have the same exposure to the delivery. But instead, Uber's been talking about that being like a area of strength for the company recently, where Lyft doesn't have that. And so again, I mean, I do think if we do hit this economic slowdown, people are going to be ordering less food, but that hasn't happened yet. And I was completely wrong on that trade because I actually used to like Lyft more than Uber for that. And I of course got out of that trade, luckily. But either way, Uber doing well, Lyft not so much.
I have never used Uber Eats. And I think I don't think I have used a food. Is DoorDash gone? DASH?
No, I
Uh,
think you just need to type it in. But there you
um,
go.
oh, that's okay. I've never. I mean, boom! I just call in, go pick it up. Boom! It's ready. Boom! I mean, it's
It's a
just
good
wasting money. It's wasting money.
It's a double whammy because you pay more for it, and then like there's a chance the food sits there for 10 minutes before the guy picks it up, and you're like not even getting you're getting a worse product and paying more money for it. Which I understand for some people, it may be their only option if they need to order food and they don't have access to a car or something. But I'm done doing that. Discus and I'm all grown up
And you know they eat some of your French fries.
now.
You know that. You know
Who
they
wouldn't?
dip in there and get a couple. Check for greasy fingers on that. But no, I guess they stapled the bag too. But all right, let's S&Ps did get up to 52.76. Holy moly. I mean, I can't say an inside day because that pre-market low is 51.82. So keep this in perspectives, folks. We rallied 90. It was kind of, boy, it was loosey goosey after the close yesterday. I don't know if you guys were trying to trade it at all, but we went down to 51.82. We dipped into the 5,200 handle and then obviously rebounded. So we've had a 90-point rally from that low yesterday. So we'll see if anyone attempts to ring the register. We got to figure out what to do in this 5,200 handle. I mean, because it's traded like this thing like absolute water here. 5,300, found some sellers yesterday's high. Under 5,200, we found some buyers. We need to just calm down, Brown, and just get just a little bit of peace in this market. Let's just take a look at the Japanese yen. Let's see what the yen is doing. Quiet consolidation inside day in the yen. Let's look at the ETF. The ETF is holding in. So far so good. 842. We're still here.
Yeah, and I mean, it looked like a buy the dip market for a while. And then yesterday was a big sell the rip day. So, I think today it'll be a big test for the bulls to see if they can, keep the S&P rallying. Because, I mean, even if we open up like around 1%, which we're scheduled to right now, and then it ends up giving some of those out throughout the day, like to me, the intraday action here has been what you want to watch because every night it seems like we've been, trading higher after hours, set to open the market and then just kind of selling off throughout the day. So, not sure here. It looks like
Hood update. It caught a bid at that 1750, sleeping at the wheel. We talked about it, remember, just a few minutes ago. Caught it here, boom, 1750. Now that chart is starting to look like going right instead of left. You caught a bid at yesterday's high. Now you're trading in the 1800 handle. Of course, the SPOO's ripping 50 handles. Boom, boom, boom. There you go. There you go. There's your catalyst for Hood. Everything green on my screen. Microsoft up 457. Apple up $2. Nvidia up two.
how's
They're up.
SMCI doing?
Oh, SMCI. I think Jay made a joke that it was almost green. Now it's still down to $1.48. Oh man. Holy
Well, what
man.
about yesterday? Some other big movers. We talked about Upstart on the show yesterday, and Upstart continued moving higher throughout the day, closed up nearly 40% to
Wow.
$3.30. And I mean, I think we said yesterday when we were given the technicals, it was kind of in no man's land here, but it looks like you might have some overhead resistance right here around the $35, $36 level before that next gap up to around $50. So, Joel, what do you?
The only possible way that you could have caught this trade, I mean, if you just bought it off the open, 30, you're like, oh man, it prints under 29, no way. You're thinking, well, I don't know how much heat you guys like to take, but when it came back up through that open, I mean, it was, boom. It was just no heat at all, buying with the momentum. Then you can lean on that first 15-minute low. For technical analysis for this one today, since you bet, I mean, that you got to respect that 36.40. I don't think you're going to get a look at that 36.40 today, and you'd have to find wanted to stay green, right? It's up 39 cents. So you want to see it hold the close 33.30. If it loses the close, man, oh man, it's going to be really hard to find a level of support. I could give you one if you had more time. And maybe just, if it starts to rally up, you feel like you kind of missed the top yesterday, see what happens at 34, see if you get lifted at 34, see if you get lifted at 34 and a half. See if you get lifted at 35. If your orders are not getting executed and you're not getting lifted, then chance of there'll be some more profit taking. But looking for an inside day there in Upstart.
And then we also had Fortinet, ticker FTNT, report yesterday and continued just ripping throughout the day. It closed up, I want to say around 25% yesterday. I mean,
wow.
Maybe maybe some of the people in the cybersecurity space selling their CrowdStrike to buy Fortinet here. Fortinet closed up, $14, 25%.
Still, I'm going to respect the $72 area. I know you have the one high at 73.63, but you just missed 72 yesterday, 71.82. This high comes in below that at, where is this high? 71.83. That's good enough for me to make it a 3-star. You're $2 away from it. If you don't want to exit today, you're waiting for get a little bit of a base here. You're far enough above that gap up area. Perhaps found a new round of buyers at this, whatever, 67, 68, 69, and get a little push up. But resistance harder to find, or support harder to find than resistance here in Fortinet.
All right, let's see any other stocks. I'm looking in the chat to see if we've got people. Any ticker time? Richard wants to look at Amazon, Joel.
Okay, let's go to the Zon. Up $1.94, trading better than the market. Boom, where are we at? I had the futures up there. Nope, this is right. This is the pre-market action. I guess if you want for stocks, and all stocks have different correlations, man, yesterday's high, I just feel like if you want that for targets, I think that's going to be tough because yesterday's high was 167.58. The previous day's high was 165, so that's not as relevant. So look for that. Yesterday's high 167.58. I don't think you're going to get there. I'd call it support at the close. Would be really nice to get into this gap. If you're a longer term trader, you think everything's just going to blow over here. You could be patient, maybe wait for a gap fill. That's way up at 181.87. That's going to be quite a ways away. And then just about a 50% retracement. Looks like we were 200, almost to 150. Let's call it 175, 176, the 50% retracement here. On Amazon S&Ps, finding sellers in the 52.70 handle. We made a high, I believe, at 74. We took it out again, went to 76.25. So some days it's good to chase a breakout of that pre-market high and get a little bit of oomph on it. It seems like you're finding sellers, maybe people that bought the dip yesterday, right above that area.
Wild. I don't like, it's a jobless claims number. Like, these numbers used to be irrelevant to the market. Like, if we went back 3-4 months ago, it wouldn't move the market at all. Every economic number just moving the market. They want any hint, inflation, no inflation, and then they obviously want to know recession or no recession. They're just drawing so much from every economic number now. That's one of the most violent jobless claim numbers I've seen. This isn't their jobs number. Well, this isn't like the regular jobs number. This is the jobless claims number. This is usually a nothing burger. Not anymore. Not in Kansas anymore. Every single macro driving the bus, every single piece of economic information just comes in hot, not. They're ripping, they're dipping, they're all over the place. Crazy action. That 20 minutes was insane.
Did you, so you canceled, right?
I canceled. Then I'm just trying to buy stuff. I'm like trying to buy whatever the hell hasn't went yet. And then, what you're trying to do. And then we start going down. Then you're trying to stuff that maybe went too high. Or just basically doing arbitrage, trying to pick up this, pick up that, stuff that moves, stuff that doesn't move. It was violent, man. Joel, really, really violent move.
Oh, I said, well, just think about it, Dennis. Look at the way we've been trading through this 5,200 handle, and it's the same thing in the SPY. I mean, this is where we got to find a home. The 522 handle that equates nicely. I mean, it's just we got to find some stability in here, and then also, and I don't know if you heard it. We got almost 100 points off that the low from the low from yesterday, the pre-market low. We traded that where it's
We
today's
are
low.
just in chop fest central.
Oh, I
Like
know.
it's up, down, left, right, BA, select, start for all you Nintendo players back in the day. But wow, it's crazy moves here. So you start thinking about the 50% retracement of the move that we just had overnight. I mean, we got up to 532, down to 515, now up to 523. You're probably in there, Joel. You're probably in there. And I mean, the reason we stick to the 50% retracement, we've loved it for years, is just that's where people start. You get you have to move back. Lots of bag holders are being made whole again. Just seems to always be turning points here, but I don't even know what to say here. Obviously, still driving the bus is going to be the Japanese yen. That's what matters overall. But the economic data will give you noise. This is a trade-off of noise here right now. So still keep an eye on the yen. That is what is going to matter. Yen, I don't know which chart that is. Breaking down slightly here. Breaking down, correct? Yeah, the
Yeah,
left one we're looking at.
yeah.
That's good. That's what the market wants. The market wants the yen to go down. So that's helping the rally as well. Yen down, market up, yen up, market down. That's really what matters the most. And the yen selling off a little bit on this jobless claims number is good for the overall market. Keep an eye, though. That yen starts to perk up again. That market starts to roll over. Watch the yen.
I've been looking at in this yen, and I know it's, not a fancy number, but just simple technical analysis. Look at that low from yesterday in the yen. This is called 68.6801. That, to me, that'd be a lot of relief to the people in this trade if that thing cracks 68, because there's not a lot in there. Not a lot in there. I mean, and if you also could get a retracement of this move, 62.5 to 71, that a 50% retracement take you back into this area. That would help a lot of people out.
But yeah, Dennis, just back to your point. I mean, I think when we're at this inflection point where people are looking for, clues as to are we entering a recession or not, those numbers become a lot more important. And, of course, this morning, good news was good news again. And I mean, that hadn't been the case for a while because people wanted interest rate cuts. And now that the interest rate cuts are seen as a certainty, I think we've flipped from wanting the bad data that would lead us to an interest rate cut. So we want good data now that shows that things aren't as bad as they are, but not good enough data that would mean that we're not going to cut rates. So I think this was kind of that perfect number that was like, yeah, there's
fickle.
still,
What a fickle market.
Yeah,
market doesn't know what the hell it wants.
we're kind of threading that needle with the data of okay, the numbers were better than expected, but not great enough to where now the Fed doesn't have to cut rates at all. We're still talking about either, which by the way, the CME watch tool has moved now. When we started the show, it was a 70% chance that we were going to get a 50 basis point cut. Now that is down to 63.5. So still CME.
What do you think, Dennis? Do you think they're going to go half?
Yeah, I do. In September, I do. I think there's so many more. And again, it depends where we are, Joel. To AB's point, the market depends here. So if we're still sputtering because of a carry trade a month from now, I'd be surprised we're still sputtering. Or if there's a new risk, then there could even go 75. But I think,
no, you can't flip like that. That would upset the app.
It all depends on where the market is.
Okay.
You've been in this market for so long. We have been in this market for so long. We know that the Fed is market dependent more than they are data dependent. Think about COVID. When that happened. Emergency cuts. Every other day, emergency cuts. The markets would rally for a minute and then they just sell off again. More emergency cuts. The market's going down still. More emergency cuts. Powell, we need more. We need more. The meatloaf. We want it now. No, just ridiculous.
What movie is that from?
Old school. That's awesome.
I mean, yeah, you could say that the market, the interest rates are going to drive the market. I think it's like to your point, the other way around. I think the market's going to drive the interest rate cuts. If we had followed up Monday with another, down 2-3% day. I mean, like, the Fed might say that they're not looking at the market or gyrations in the market, whatever it is. But if all of a sudden you have millions of Americans whose retirement portfolios draw down 10-20% in a 2-3 week period, then the Fed will start talking about those emergency cuts pretty quickly. And so, to your point, Dennis, we have about 5 more weeks until that next decision. So the market could go any which direction till then, and impact what the Fed is doing. Whether the Fed says they're looking at the market or not, they are at the end of the day.
Oh, they are. They do. They say they don't, but they do. Pablo asking me, and multiple people have asked me this: what do you do in the long-term account? Are you buying stuff? Are you buying stuff? I did a little bit of nibbling. I bought a little. Like I said, I've been dollar cost averaging into Tesla. So, I'm thinking a 5-year time horizon. This is not a trade. So I bought a little bit more again. I've bought Tesla probably 10 times over the course of the last 6 months. I just buy every week and make a little bit trading, put a little bit more in Tesla every week. So I've been kind of picking on Tesla. I sold out of a lot of my IWM long-term position yesterday. That was one thing I did on the rip. And the reason was a lot. Jim Tassoni was talking about that. There's just a lot of companies that are just crappy. And this has been underperforming for so long. I've had the IWM there for a couple years. It's just been junk. I had a good rip yesterday. I sold right near the open, so I was pretty happy actually after we sold off. I still have a small piece of IWM, but it's very small. I probably would put that back into the queues at a certain point in time. Just, you know what? It's just a tech economy. It's just not a small cap world anymore. And sitting here positioning for a catch-up trade, I just think, this catch-up trade people have been trying to call for a long time is just not coming. I did try to buy a little bit more SMCI yesterday, but then I was like, you know what? It's just too weak. So I'm not going to catch the falling knife here
Down
on
$5.
SMCI.
Down $5 in this state.
It's just so weak. And I don't want it to pull. And Intel's been an epic disaster for me. I don't want SMCI to become another Intel like that. I don't think it is. But I think, if you're sitting here just trying to catch the falling knife, man, knives are really hard to catch right now.
What about, and there's a question here, and ScarJo Rabbit.
Just before, I want to keep clarifying, because this chat, and Twitter is so short-term focused. I don't, they keep saying, Dennis thinks FSD is coming tomorrow. I don't. That's why I'm dollar cost averaging in, because I don't know the timing of it. I'm not buying. Somebody said, why don't you buy leaps on Tesla? One, the premiums are too high, and two, I don't know the timing of FSD. I think it could be two years from now. I think it changes everything, though, once he figures it out. I'm betting that he figures it out. If he doesn't figure it out, if Tesla does not figure out FSD, Tesla stock is going to go lower. If you're in it, you're betting on FSD. I think the humanoids is going to be huge too, but that's a long ways out. So I'm positioning long-term, short-term. I have no trade on in Tesla. No trade. Not in the short-term account, folks. It's not there. It's in my long-term account. So quit saying that I think FSD is coming tomorrow. I don't think it's coming tomorrow. But I think when it comes, I think it's a game changer. And I think Tesla's going to figure it out. I think the key word. I know nothing. I have no crystal ball. But I don't want to be not invested in Tesla and then they start to really go someplace where they're actually getting closer to figure it out. I don't know the timing of FSD. But I think if you have 5 years minimum, 5 to 10 year time horizon on Tesla, I think you're okay here. I think it's going to be a really good one. 5 to 10 years. If you have a 5-day time horizon, you're nuts for trying to buy Tesla and call the bottom right now. So know your time horizon, know why you're in the stock. I am not in it for a trade. I'm sticking in my RSP, Registered Retirement Savings Plan, in the long-term account. Not for a trade, in the long-term account.
Quick technical on haven't pulled up Tesla in a while. For you shorter term traders or swing traders, man, got a triple top here at 203.50. That's $9 away. So if you're looking for a sustained rebound, boom, you got to take out that area. For right now, I'll say there's decent support at 192. So if you're in it trying to pick a bottom for the swing trade, I think you cut it at 192. And 180 looks like, man, because you had all that noise here. I would, if this
doesn't
came
look
down
good technically.
To 175 to 180, if it came down there and did one of these patterns, then I might even join you, Dennis. If it comes down to this area,
and again,
I might
Joel,
even join you.
You're talking trading. And
I'm talking
Elon
longer
Musk
term.
said it
Longer
best.
term.
We need to separate it. Elon Musk said it best. If you think Tesla's going to solve FSD, you buy Tesla. If you think Tesla's not going to solve FSD, you sell Tesla. This is a binary bet. I think if they solve FSD, Tesla's $1,000 stock. I think if they solve FSD, I'm not sure they're going to though. I'm not sure. What just happened?
We just found a little bit of sellers here. I don't know. I mean, I've
I
seen
gotta work out of some stuff.
Okay. All right. It's
All
9
right.
o'clock. It's late. Craig Johnson coming on tomorrow. Great show, Dennis. Great show, Aaron. You guys, man, I love working with you guys. You guys are so good, fun,
The chat was
informative.
great today too, by the way.
They're always good. Love the chat.
Yeah. Let's just keep our fingers crossed on that.
All right. Well, guys, again, thank you for tuning in with us today. Craig Johnson tomorrow morning, 8:35 a.m. Not a better time to bring on Craig than to help us understand these crazy markets. We will see you guys tomorrow morning. Live trading starting up right after this. See you guys there.